Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the volume profile of this impulse to the upside, because what you see here is very typical for an impulsive structure where the first couple of 1-2s have pretty much horizontal volume. Then we have a wave 3 to the upside where we can see some high peaks and volume increasing over here. And then once we get into the 4-5s over here, right, 4-5, 4-5, 4-5, that is when we also see volume decreasing, and that is exactly what we like to see. If we then think about the medium time frame scenarios that are matching this pattern over here, then we have to think about two scenarios, the bearish and the bullish one, but in both cases we are looking for a wave 5. The difference is the degree of the wave 5, the Elliott wave degree. So the first one here, this is the bearish scenario where we're looking for a wave 1, 2, 3, 4, and we're working on a wave 5. Most common target for the green wave 5 is between the 1.236 and the 1.618, between 38.7 and 40k, with these fibs taken from the high to the low over here, and the 0.618 is a maximum target at 43.7k for a potential wave 5. After this wave 5 is in, we are then looking for a retracement to the downside, and in the bullish scenario where you're looking for a wave 1, 2, 1, 2 and then continuation, we're looking for price to bounce in the white box over here. The most common target for a wave 2 is between the 0.5 and the 0.786, pulled from the low to the high that we have at the moment, giving us an area between 31.9k and 27.9k. However, preferably price is not moving below this white box and this blue line over here, because if we zoom out to the daily, then you will see that this is a very important support resistance area that we have, the white box over here, and this is the value area low of this very big range in 2021, also acting as an important support resistance area. So preferably, price is not closing any high time frame candles below over here, but instead finds support, and then we can be looking for price to move towards the upside in the bullish scenario. In the bearish scenario, we would be looking for an A, B, C, and then a move to the downside. It all depends on the retracement. In the more bullish medium time frame scenario, we are looking for this high over here to be a wave 5, but then in the blue count, which is a lower degree Elliott wave count. In this scenario, we have a 1, 2, 1, 2, and then another 1, 2, followed by 1, 2, 3, 4, wave 5, finishing white 3. Then we have a corrective structure in 4, 5 is finished, which is then finishing the blue wave 3, zigzag in wave 4. Then we're looking for a diagonal structure in this wave 5, and this blue wave 5 is then finishing the higher degree wave 3. Now what you can see is also here the most common target of the blue wave 5 has now been hit, the 1.236 to the 1.618, pulled from the high to the low over here. The 0.618 here is sitting at 42.1k, which is taken from the low to the high of wave 3 to the low of wave 4, giving you this target area over here, with the 1.618 sitting at 40k. Now then we would be looking for a retracement to the downside in a higher degree wave 4, where preferably we get a bit of a deeper retracement to the 302 or the 05, mainly because of the very shallow retracements that we have over here, and there was a lot of liquidity, or there is a lot of liquidity in this area. Now the target area for wave 4 is between the 236 and the 0.5 over here, which is between 35.9 and 32.5k. The 0.618 is an invalidation for a wave 4, so you don't want to hit the 0.618 at 30.9k. So actually I should have moved this box over here like that, where the 0.618 is the invalidation. Now if we look at some support resistance areas in this area, well, I can open my target boxes. Then we have support here at between 34.3k and 34.5k, also at 33.7 to 33.9k, and we have this key level over here right on top of the 0.5 at the moment, which is the high of a 1 hour gap that we have here on the 1 hour time frame. Now if we open that important support resistance area that I was showing earlier, then over here we also have confluence with the wave 4 target area. You can see the 0.5 is in confluence with this support resistance area, which therefore is interesting for a potential bounce. Finally, we also have a weekly gap. On the weekly time frame, we have this gap over here, we have the high of this candle, then we have a big push to the upside, and then we have the low of this candle, and this created a gap over here on the chart on the weekly time frame. As you can see, what is very attractive, the 0.382 for this green wave 4 is perfectly in confluence with the low over here of this candle, which is the high of this gap. And throughout this move to the upside with the content I've been making, we have been keeping an eye on the lower time frame gaps, and they are usually very, very nicely respected. What we like to see, and what happens most often, is then price hitting this area and at least see a reaction, some form of support to the upside. And at the moment price is closing candles inside this area of a higher time frame, like daily candles, it increases the probabilities to move to the lower edge, which would also invalidate a wave 4, but then we have to think about maybe this more bearish scenario where we look for a wave 2 and then continuation to the upside. So this gap is something that we have to keep in mind, but the 34K area is very interesting indeed. If we then go to the 1 hour time frame and look at the diagonal, then what we're looking for over here is a 5-wave structure to the upside. 1, 2, 3, 4, 5 are finished, and potentially wave 5. We're looking for a 3-wave structure in wave 5, which has to be a zigzag, because in an ending diagonal, all of the waves have to be zigzag structures, or at least family of the zigzag, which also means a double or a triple zigzag structure is allowed. Now in this wave 5 at the moment, we would be looking for a simple zigzag structure, 5-wave structure A, looking for a wave B, and then a wave C to the upside. Arguably, we can also look for a WXY, which then would be a double zigzag, where we have an ABC over here, corrective structure, and we're looking for another ABC to the upside. This is not yet off the cards. This is definitely still possible, where this is then a WXY. Why, right? Because the most common target area for both a wave Y as well as a wave C is between the 1 and the 1.236, taken from the low to the high to the low over here. As you can see, we currently did not reach that area. We did go above the 0.618, which for a wave C is a rare target, and for a wave Y is a bit more common target, but we did not reach the most common target area. And if we look at the target areas, we are currently ranging inside the golden target box over here. We just hit the weekly naked point of control, and on my chart, if you take a quick look at the left top of the chart and you take a look at the high over here, then you can see that the high on my Coinbase chart is exactly 39K to the absolute cent. So that is incredible, very, very nicely respected, and we're basically ranging between the point of control of 2021 and the weekly naked point of control. But the wave C target area, or the wave Y, if we look for a 3-wave structure, is over here in confluence with the blue box, and the blue box is between 39.3K and 39.7K for some additional support or resistance, sorry, so some additional resistance, where then we're looking for a move towards the downside. If we go to the most bullish scenario, then we have to think about an impulse, where we had a triangle over here in a wave 4, looking for a wave 5 towards the upside, where we're then looking for a 1, 2, 1, 2. You want to see impulsive continuation, but that also means you like to see volume moving up, you want to see big candles and all that good stuff. At the moment though, looking at what price is doing, volume is moving to the downside, does not look impulsive, and also the probabilities of this scenario, if you look at where we are at the moment on the chart, is currently the lowest between the 3. Yes, we are in an impulsive structure, and upside is of course the trend at the moment, but if we are looking for a 1, 2, 1, 2, and then eventually a wave 5 of a higher degree, where we look for a 1, 2, 3, 4 wave 5, a double 1, 2 is usually something you see when a wave 3 is starting, right? Not really in a wave 5. And also if wave 3 is extended, then the probabilities are a lot lower for wave 5 to be extended. Usually it's only one wave that is extended, which is then wave 3. And if wave 3 is extended, wave 5 usually reaches the normal common targets for a wave 5. And this would, well, give Bitcoin much higher prices for a wave 5, which currently does not really work with the price action that we see locally, but it is something we have to at least keep in mind, especially if we start to reach the invalidation levels over here for a diagonal, which is at 40.4K, because a wave 5 is not allowed to be longer than a wave 3. If we then look in the bearish scenario, or actually bearish but then bullish scenario, because here we do expect to move to the downside but then continuation to the upside, then this whole sideways structure is seen as one big range. Now the probabilities aren't too great here as well. We're looking for a WXY with flats in each of these waves. W running flat, not common. X regular flat, less common. And then Y, we're looking for an expanding flat, which is common. But if you look at the context over here, this would be the third flat in this big range. Now that is possible. Wave W and wave Y can be the same structure, can both be a flat, with wave X also being allowed to be a flat. But generally it would be quite like epic if that actually is the case, and this would be the scenario, because it is very rare. But we would then be looking for a wave A to the downside, double zigzag, three-wave structure to the upside in a wave B, which is then an A, B, C. Again, we have to remember ourselves or remind ourselves that the wave C target area is actually a little bit higher. The wave C target area, most common target area, is here and not here. That decreases the probabilities a little bit for this scenario. Now the most common target area for this wave B is between the 1.236 and the 1.38, but the 1.618 still a target, just less common, right? A bit more rare, 39.5k. Now that 1.618 is in confluence with the wave C target area, but then again for a wave B, this is less common, as this is your common target area. So it does lower the probabilities for this scenario if price moves up. But probabilities generally are already a little bit lower if this is the high of C, because your wave C is so short. So at least it's something that I like you to remember, like planting the seed, right, in case we get an impulse to the downside. But yeah, we have to observe the local price action. If we look at the CVD divergences, we go to the 50-minute. And then after we hit the point of control, high time frame point of control at 38.7k, very, very nicely respected. We saw some 3-minute bearish CVD divergences over here. We saw this during the live stream as well earlier today over here, right, where we had the high and then we saw a lower high on price, a higher high on the yellow CVD, also with the highs over here, higher high on the yellow CVD, bearish CVD divergences, price moving to the downside. And currently there is no other real like CVD divergences to mention here. We are currently on the 3-minute ranging. As you can see, price made a high, but the yellow line did not go above this high over here. So there's no bearish CVD divergences at the high. Arguably, you could say we have bullish CVD divergences instead, but this is a 3-minute time frame. What I prefer to do typically when price is pushing is to be very calm and wait for a range. From an Elliott Wave perspective, the ranges will give you the most information for what is then coming next. If you look at the micro, then at least I want to say that over here price bounced on the 0.5. That is a common target for a wave 4, in case we're looking for a 5 to the upside. But if we look at the volume of this move to the upside, we can see that it is the move with the highest volume in this trend as well at the moment, but also more locally. So in an impulsive structure, preferably in both a wave C and a wave 3, we would like to see a wave 4 and then a wave 5 on lower volume, right? Another high to be made, but then on lower volume compared to the move that we had over here. Now, if we are looking for a wave 4, then preferably price is not going to go below the 0.5, and preferably it does not hit the 0.618, which is sitting at 38.5k. If price would move to the downside and hits this level, then a wave 4 is invalidated and we have to look for other scenarios, but it increases the probabilities that either this move is finished and we look for lower prices, or this is another 1-2 continuation, but that doesn't make sense at the moment. So preferably we just don't see that, right? Now also, a wave C does like to end on higher volume, as we have seen more often throughout this range. And what I mean here is a potential A, B, C ending with high volume. We have seen that throughout this range. Remember this one over here as well. Look at the volume at the high, right? We did not get a wave 4 and then another wave 5 to the upside. High volume in the move to the upside over here, no 4 and no 5. Same happened over here as well. 3-wave structure to the downside here, high volume in the low. That is typical nowadays also for wave Cs. So that is something to consider with the high that we have made here, right on top of the weekly naked point of control, but we do have some interesting resistance above. at the blue target box. Now we do have news. We already had some news at 5 p.m. Central European time, but at 8 p.m. Central European time, an hour after this video is online, we have some more news, might increase the volatility, so make sure that you trade safe. And if we then look at the probabilities of all the different scenarios, on the medium time frame, I'm looking to end eventually a wave 5, where currently the more bullish scenario has a little bit of a higher probability, where we're looking for a wave 3 to finish of a higher degree, then a wave 4, and eventually another wave 5 to the upside. The thing is that in both cases, the move is the same. We're looking for a 3 and then a 4 to the downside, and if we're looking for a higher degree wave 5 to finish, we also look to the downside, and once we then get a move to the downside, that is when we can assess the probabilities better between these two scenarios. We have to be patient, first of all, more locally here as well, for price to show weakness. We don't catch knives here, we don't YOLO, we don't FOMO. We wait and see what price does, and especially we wait for ranges to form. If we get a range, then we can assess better what the probabilities are for up or downside. And if we get a bit of a solid rejection to the downside, that are right over here as well, right? In Elliott Wave terms, wait for a range or a rejection and then proof of resistance. If we get a range, we can observe the probabilities for up or down. If we get a bit of a rejection and then a retracement, we can assess the probabilities of this potential move for bearish continuation depending on the proof of resistance that we then see at the moment and the structure of price moving to the downside. Now on the low time frame, the diagonal at the moment has the highest probability scenario over here, where preferably we then find a little bit more upside still for this wave C, which could work nicely if this is a wave 4 locally and then a 1, 2, 3, 4, 5 wave move, reaching this target area over here, also where we have the blue box. And that is then also what I write over here for the micro probabilities, where behind micro I wrote blue box, which is this one over here. Preferably here, taking the high then without touching the 0.618 that I've shown earlier in the video. And also here, wave C/5 ends with an impulse. A wave C is also an impulse. Preferably, you then see a wave 5 on lower volume. However, a wave C can end on high volume, right? As we've seen just now in this range earlier. So that's something to consider. If price does touches the 0.618 and we see some volume going down, well, we're going to be looking for a bit of rejection and eventually another retracement, and we assess the probabilities. What is quite clear based on the volume I showed at the beginning and the scenarios is that we are looking for a high to be made very soon and then get some sort of a rejection. We now go in the weekend, and the weekend is known for weekend ranges. So let's see what the weekend is going to give us. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.